Hello traders, Gary Wagner here, just about 10:10 in Honolulu, 4:10 in New York. It is Thursday, October 27th, 2016, and this is the Daily Report for Gold and Silver. After yesterday's sell-off in the market, not dramatic, fairly moderate, but nonetheless giving back what we saw gained on Tuesday, we do have a nice update in the precious metals markets, with gold trading about $3.30 higher, 340 current print at 1270, putting it up about 0.3%. The low is 65.20 and the high 73.70. That, of course, is when we look at COMEX futures. Spot gold right now is currently at 69.13, up $2.58. Spot silver is trading higher on the day, but nowhere near the type of percentage change that we're seeing in gold, up about 3 cents, up about 1.5%, trading at 1762. And then finally, I do want to take a look at COMEX silver. That is at 1763.5, trading up under a penny on the day. So nominal change in silver, nice move in gold. Let's take a look at our first chart. So no doubt you have probably noticed some changes to our daily report in terms of the visual representations and the charts. And we have just completed the rebuild of our studio. So please bear with us as we work everything in and optimize everything to give you the best report possible. With that in mind, let's take a look at our first chart, which is a weekly chart, standard candlestick format. And the other thing that, of course, you will probably notice about this chart is we have two basic fib retracements, one which begins roughly at 1050. That would be the low this year, up to the high that we have seen this year, which comes in roughly at 1376. And then secondly, we also have a fib retracement, which really begins at the tops at 1376. Right here, and then runs down to 1250, which are these lows. Now, there's a couple of things that are quite evident. The first thing that is completely evident is we absolutely have this strong level of support that we talked about, and that is at that 1250 area. We entered roughly at 1259. That is where we got long. Now we want to determine at what points we might find some resistance, and to that end, we've added this secondary fib retracement. Now a 61% retracement comes in at 1298, and so that's going to be a major resistance point. But traders, what we really want to do is to plot the minor resistance points, and so to that end, what I've done is I have turned this on its head, so to speak. So now you can see the 61 is at the top, so we're going up 23, 38, 50, and 61. So the first minor resistance level, which we have encountered over the last couple of days, comes in roughly at 1273. That's a 23% retracement. And again, it's a retracement of this last correction right in here. The next target, of course, is going to be 1392. We know that that's going to be a harmonics of sort, because when you turn it on its head, that's where your 61% retracement comes in. And so that's the real key area, as I've said on a couple of occasions, that I believe we can look at as an exit strategy for our current position. So traders, as far as silver goes, as you know, we've sat on the sidelines. I haven't issued any kind of recommendation. I'm still holding to the fact that my sense is until we break above this, what I believe to be our resistance line, and it's really just based upon the lows in the market and kind of extending that move up, unless we break above this particular price point, I'm not very favorable to silver over gold. I do believe that they'll both move up in tandem and typically down in tandem. However, I think that on this particular move up, it's gold that will outperform silver, and that's why we only made the call specifically for gold. So maintain your current long position, maintain your current stop. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.